Hello traders, welcome back, and it's now day 16. You're almost done with the boot camp. I'm excited about this because we're getting into more advanced stuff now, just little stuff, just little simple tweaks, nothing too extraordinary or nothing too detailed to add on yet now. So we're just kind of finishing this thing up, and in today's video we're talking about internal versus external sequences, which are really, the point of these are just to kind of help identify and help you kind of arrange your thoughts. They're not necessarily something that's going to change your way of trading. It's not going to dramatically improve your profitability or anything like that. It's good to know, and it's good to have because of really just saying it. And so, when you're in a live room setting or when you're asking me a question about a trade setup and a sequence, and I say you're looking at an internal rather than external or vice versa, it's useful to know. So basically, the gist of it is every video that we've talked about prior to this, every day of the boot camp, anything to do with sequence, we've been talking about external sequences. We've been talking about that main external sequences. And keep in mind, you're only looking really for the majority of the trades you're looking for. Your entering, your targeting, and your stops are all based off of an external sequence. They're those big obvious sequences like we talked about in one of those videos. I said, squint your eyes and look at that outline. That's an external sequence. Well, now what we're going to do is just get in your head. I'm not going to pound it too much, but get in your head that there's inside of this, there's more detailed sequences. And a lot of you guys are going to be working with these detailed sequences because most people that take this course are going to be trading shorter term than I am. Whether that's because of patience, whether that's because of timing of work, or because of your investment size, that doesn't matter. But when you're dealing with internal sequences, you just have to know that they're there, but the rules apply all over. And so they're basically just a little bit more detailed. They're just as simple. You're still measuring from origin to 1 to 2. Everything's the same. But each time there's an external swing, you have to understand that there's at least a 3-wave swing internally. So I drew this out for you guys, and as you can see down here, if I can kind of map out what you're looking at before I get right into it, here's sort of your map. This is your color coding. Your external is labeled in this little gray, the grayish color, and your internal is labeled in red. And so as you can see, each time the market moves, here's the gray 1, here's the gray 2, here's the gray 3, same as over here, 1, 2, and 3. Each time the market does this, it also is making an internal sequence. So as you can see, this is basically 1, 2, 3. And so all we're looking at is that more intricate pattern. And the reason you're doing this and the reason I'm showing you this is going to help you with what's called the extension dip trade. And I apologize about changing the slide there. The extension dip trade is what you're going to learn in tomorrow's video. The reason this is important is because the extension dip trade takes advantage of these. So this is why, of course, we're talking about this before the extension dip trade. And so what you want to get in the habit of doing is making sure that if you're labeling, you know whether it's an internal or an external. An external is basically the underlying point of the market, and internal is inside of that. It's much shorter term, much more intricate. And as far as talking about it and as far as doing it, it's probably going to be more difficult for you guys to even find internals rather than externals. But there's a couple reasons to know where they're at. Number 1 is targeting. Number 2 is entry. Number 3 is stop. It's basically all to do with your trading plan. And so you want to make sure that you know what you're looking at. Are you dealing with an internal or are you dealing with an external? And so this is where zoom out, zoom out, zoom out, and that slogan kind of comes. The more that you can zoom out, the better, because when you're zooming out, you're getting in the habit of only looking at external sequences. When you're continually zooming in and looking at the more intricate things, you're only dealing with internal sequences. Now keep in mind, the sequence training we're talking about is basically a culmination of things I've learned, whether it's in Elliott waves or whether it's in harmonic patterns and things of that nature. So we're putting together these parts. The reason that I name them like this, the reason that I call it internal versus external, the reason that all this happens is simplicity of use. What I've done is basically taken all the years of information, and I put it together inside into this. So if we were to look at this pair here, this is New Zealand dollar. This is actually one of those trades that we had looked at as part of, I'm not sure which video it was, but this is as part of labeling and finding sequences. So as you can see, we have an origin here in blue, origin 1, 2, and 3. And as you can see, the very bottom of the chart, there's the dotted line for the buy limit. So 3 is down here. All an internal would do is help you to find a sequence in here on this pullback, as well as you can see, it just finds that next sequence right here. And so the trick that I use is I would take origin here, 1 here, 2 here, I'd get my level, and then I'd come in and call this origin, this 1, this 2, measure, 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 and get another level. This is very similar to the golden zone, because then if you get 2 100 levels or anything like that, if you get the two of them together, that's when you start to see a good chance of entry. And so internal, external, whatever you're looking at, what you're trying to figure out is your best odds for entry, the best zones that you can for entering the market. All right, so let's hop over to the charts real quick. All right, so now that we're on the charts, we're going to go back to this pound yen trade we've been looking at. I just want to show you the power of internal legs and how you can control them and how you can use them to just dictate what the market's doing. So as we've talked about, this is our external sequence here. Okay, and we've gotten that 100 level down here a little bit. Internally speaking, check this out. This is now our point 2. And as you can see right here, we have a different sequence that happened. So if you were to measure that and trade off of that, the unique thing about it is they work just the same. As you can see, the market came right down to the pip to the 100 level on the daily and is now rejected off these lows about 500 pips. Now, I'm not saying you would have picked that up, but the good news about it is you can start to get used to trading these internals versus externals. So you're always just simply zooming in and finding these shorter opportunities. And when you go into, say, a lower time frame, you can see these much clearer, right? You can see them much clearer. And so all you're trying to do always is look for origin to 1, 1 to 2, 2 to 3. You're just looking for the point 1 to break, and once it breaks, a new sequence is viable. Right now we can see this is swinging. Here's a pullback. If this market decides to rally, point 1 is broken. This is point 1. It's broken. Now I can measure this area, get a 100 level, start to look at my confluence, start to look at golden zones, start to see what I'm seeing. Okay? So as you're doing this, what you're doing is you're just trying to label these, and you can label as many as you like, but you're trying to trade in your trading plan. What's your trend? Trade within your trend, whatever that may be to you, and figure out the best potential setup for you. So as you can see here, the externals are much wider, the internals are much more inside or detailed. Typically you can see both of them in the same time frame, but it's really good to get in the habit of looking for your externals one time frame above your internal, then zooming in, and we could zoom in all day long and find more internal legs. If we want to go down to the 15-minute, what do you know? Here's a potential internal swing right here if this high breaks. Right here, origin 1, 2, 3 if that high breaks. So you can see you can do this all day long on all different time frames. All you have to do is get to know how to label the sequence. If you don't know how to label the sequence yet, you must keep practicing. You must keep looking for it and seeing it, forecasting and drawing it on your charts. Okay, so that's the difference between an internal versus external. An internal is just shorter term, and one guy's external is another guy's internal, and vice versa. It all depends on how you're trading, what time frame you're trading on. You should be trading on higher time frames with this method, but if you're not, understand that what you see as an external on a higher time frame might be an internal or on, I'm sorry, what you see as an external on a lower time frame might be an internal on a higher time frame. You just have to get in the habit of knowing that and being aware that everybody's going to have a dynamic measurement. Everybody's going to see different things. So I'll see you guys back here for day 17.